the opportunity to host today's call. I'll hand over the call now to Mr. Salil Bawa, Head Investor Relations, Welspun Group, to introduce the management. Over to you, Salil.
Thank you very much, Ashutosh. Good morning to all of you. On behalf of Welspun Living Limited, I welcome all of you to the company's Q1FY25 earnings call. Along with me, we have with us today Ms. Dipali Goenka, Managing Director and CEO. I have Mr. Sanjay Gupta, Chief Financial Officer. We hope you have had a chance to review the investor presentation that we filed with the exchanges yesterday. The same is also available on our website. During today's discussion, we may be making references to this presentation. Kindly do take a moment to review the safe harbor statement in the presentation. As usual, we'll start the forum with opening remarks by our leadership team. Post that, we'll open the floor for your questions. Once the call gets over, should you have any further queries that remain unanswered, please feel free to reach out to any one of us. With that, I would now like to hand over the floor to Ms. Dipali Goenka, Managing Director and CEO. Over to you, ma'am.
Thank you, Salil. Good morning, everyone, and thank you for taking the time to join us today for a Q1FY25 analyst call. I would like to share some highlights of operating performance as well as some achievements during the quarter under review, after which Sanjay would share highlights from our financial matrix. We are happy to share that the revenue growth we have witnessed during the last FY24 continued in Q1 FY25, with our revenues up by 17% Y-on-Y to reach 2,588 crores. All our businesses have contributed to this performance strongly in global markets as well as in India. We continue to have sustained EBITDA, achieving 393 crores, clocking 15.2% in Q1, growing at 15% Y-on-Y. Hence, we are well on our way to achieve the top line and bottom line guidance we had achieved for FY25. The growth that we have seen in Q1 revenues could have been more better if the challenges that the global economy is facing in the terms of ship liners and containers availability owing to the Red Sea issues were not there. Similar to the challenges we witnessed during FY22-23, we are seeing not only hardening of the container rates to 3x of last financial year, but also in space and timely availability of vessels. With a major distribution presence in US, we have been able to ensure minimum disruption in revenues, but delays in FOB shipments due to non-availability of containers, ships have affected revenues of our different businesses to some extent. At the same time, our long-term relations with liners have seen us in good stead, leading to minimal impact in cost in Q1. We continue to keep a close watch on this dynamic situation to ensure minimum disruption to the business. Core exports. US GDP continued to grow at a decent rate of 2.9% Y-on-Y. Retail spending is up 2.5% Y-on-Y in April to June quarter as customers take advantage of deals and begin to spend more as inflation cools for the third straight month of 3% Y-on-Y in June, marking the lowest reading since June 2023, bolstering case for sooner than expected Fed rate cut. Consumers have retained the ability to spend and are driving the solid economics. India continues to be the leading supplier of terry towels and bed sheets to USA, and as per the UTEXA data, India continued to enjoy dominant market share in exports to US for June 2023, May 2024 period, both as terry towels at 44% and in bed sheets at 61% in value terms. India has strengthened its share in bed sheets by 10% and stayed flat in terry towels as compared to last year in the same period. Though the overall exports to US in value terms during this period remained at the same level in terry towels and grew by 5% in bed sheets due to geopolitical issues during Q1 FY25. WLL, however, witnessed a growth of 10% and 40% respectively, solidifying our leadership in US exports further. Our EU UK and rest of the world have also shown a double-digit growth. Exports of home textiles have seen a tremendous growth due to our unwavering commitment in providing unparalleled quality, both in products as well as in services, growing by 19% in Q1 FY25 and maintaining a healthy EBITDA of 17%. Innovation is the heart of everything that we do. Our innovation products continue to be the major contributor to the revenues of 30%, growing by 13%. Emerging businesses. Our emerging businesses of domestic consumer business, global brands, advanced textile and flooring businesses grew 7% Y-on-Y in Q1 FY25 and contributed close to 30% of the total revenue of the company. Our licensed global brands like Martha Stewart and Disney continue this growth journey and have given us an edge in US and European markets by opening up additional shelf space with the key retailers as well as in creating new avenues. Our own global brands, Wellhome and Christie, have grown over 10% during the quarter. Domestic retail. India continues to outshine with an expected GDP growth of 7.1% in Q1, vis-a-vis 7.8% in Q4, and inflation hovering around 5% during the quarter. The retail sector demand, however, continued to remain muted during Q1 to April to June 2024, mainly due to lower consumer spending, especially in discretionary categories, which is at the trough of the seasonal cycle. Nevertheless, we showed a lot of resilience despite subdued operating conditions in consumer markets, which continue to subsist in Q1 as well. Our domestic business remained flat in line with a national retail sales growth and clocked a revenue of 123 crores with a muted 3% growth despite the challenging retail market in the country. In order to navigate through challenging market conditions, we've expanded into new categories, channels, and hopeful to witness increased tertiary offtakes once the demand opens up with the festive season, which is right underway. Welspun brand continued to be the most widely distributed home textile brand in the country, with presence in 500 plus towns and 21,154 plus outlets, up by 972 in Q1. A reach not hitherto achieved by any home textile player in India. Brand recall for Spaces and Welspun has jumped substantially to 80% from 72% and 50% from 40% respectively for a target audience, thereby leading in premium and mass home textile category. Brand Welspun growth has witnessed a healthy 12% Y-on-Y growth in Q1. Brand Spaces has outgrown category in the modern trade channel, emerging as a leading brand within the category and gaining the market share. The home textile consumer business continued investment in marketing to the tune of 10%. We remain committed to continued investment in our brands for improving the brand visibility and salience, as well as a focus to build profitable business growth in the domestic consumer business. Flooring. Our flooring business continued to perform well, recording a revenue of 228 crores, flat Y-on-Y, with dispatches in Q1 impacted to some extent due to Red Sea issues. With increase in capacity utilization to 64%, EBITDA margin of the business is improved to 9%. We have added a big ticket customer in USA for wall-to-wall carpets and carpet tiles and have strengthened our position in Middle East and ANZ. Similarly, we are getting great traction from large retailers and big ticket distributors in US and UK in hard flooring, and thus look forward to a good start in flooring in Q1 FY25. On domestic market front, we continue to see growth in hospitality and commercial segments in all our key markets in India. Domestic flooring revenue grew by 15% Y-on-Y. In order to capitalize on the market opportunities, we continue our work on making inputs and entire value chain more and more indigenized. The advanced textile business witnessed a 26% growth Y-on-Y in Q1 FY25 with a revenue of 132 crores. Capacity utilization of a new Telangana spunlace facility has reached 63%. Our spunlace sales have continued to be strong in all our key global markets, forging new partnerships in US, Europe and India with the innovative and sustainable non-wovens. ESG is embedded in every aspect of operations at Welspun, keeping us ahead of our peers globally in sustainable practices. We are well on our journey towards achieving 100% RE by 2030, and in this regard, the board has approved setting up of 18 megawatt solar plant at Vapi, which could meet about 30% of the power requirements at Vapi. We are also happy to announce that Welspun is now part of the World Economic Forum Lead an Alliance of CEO Climate Leaders India, which is a high-level platform for business leaders to support concrete plans and ideas to step up India's climate action and green transition efforts. In addition to that, Welspun also joined the Reuters Vision 2045 campaign to drive sustainable change by making India the sustainable loom for the world. While the global economy exhibits mixed sentiments, the positive signs of cooling inflation and expected rate cuts in the US are encouraging. Acknowledging the potential volatility from geopolitical issues, the Red Sea situation, and elections in various regions, we stay alert and proactive. Our strategy focuses on navigating these challenges and seizing opportunities effectively. With this, I would now like to hand over to Sanjay, who will take you through the financial highlights.
Thank you, Deepali. And greetings, everyone. I'll give a brief overview of the financial numbers for Q1 financial year 25 before we open for question and answer. During Q1 financial year 25, we reported revenue of 25,588 crore, up 17% year-on-year, and which remains in the same level as quarter-on-quarter. EBITDA margin for the Q1 stood at 393 crore, that is 15.2%, growing by 15% year-on-year. Profit after tax, after minority interest for the quarter, is at 186 crore, vis-a-vis 162 crore year-on-year, growing by 15% year-on-year and 27% quarter-on-quarter. Consequently, our consolidated EPS for Q1 25 stood at 1.93 rupee per share as compared to 1.66 per share in Q1 of financial year 24. On the forex front, our average exchange realization for US dollar during Q1 was 84.05 compared to 82.16 in the corresponding quarter last year. Net debt stood at 1,562 crore versus 1,815 crore as on June 93, which is lower by 253 crore, and versus 1,354 crore as on March 24, increased by 208 crore due to capex spending and increased investment in working capital during Q1. The interest cost hence is also due to the higher borrowing for working capital, and because RBI's repo rate has remained unchanged in last 3-4 quarters, it has slightly gone up by 243 crore from 26 crore year-on-year. However, with reduction in working capital in ensuing quarter, this cost is expected to come down. Coming to segmental results, Q1 of financial 25 core business home textile revenue stood at 2,387 crore versus 2,028 crore in Q1 24, up by 17% year-on-year. Q1 EBITDA of home textile stood at 342 crore at 14.7% as compared to 15.3% year-on-year. During Q1 25, revenue from flooring business was 228 crore, up by 1%. EBITDA is at 21 crore, which is 9.2% as compared to 8.1% year-on-year. In Q1 25, we spent 206 crore towards capex, majorly towards Tar project at Anjar and Pillow project in US. The board of directors have, in its meeting held yesterday, approved buyback of equity shares of the company for an amount of up to 278 crore at a price of 220 rupees per share. The promoters will be tendering 100% of their eligibility under the buyback. Apart from this, the board had also approved dividend of 10% in financial year 24 in quarter 4 of 24 meeting. The company's outflow for the buyback and dividend hence would be totaling to 353 crore, which includes the tax outflow in this. Over the last 4 years hence, the company has distributed 40% of its free cash flow on an average to the shareholder, with cumulative 880 crore distribution out of free cash flow generation of 2,200 odd crores during the same period. Financial year 24 total distribution also works out to 81% of our free cash flow. During the same period, we have continued reduction in the net debt from 2,333 crore in financial year 21 to 1,354 crore by the end of financial year 24. With this, I will now leave the floor open for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rajiv from JM Financial. Please go ahead. Hello, Mr. Rajiv. Your line has been unmuted. Please go ahead with your question.
Rajvi.
Hello.
Yes.
Yeah, am I audible?
Yes, Rajvi.
Yeah, Dipali, if you could give some color on the order book demand retail growth in the US markets. How is our second half of 25 shaping out to be? Do we see a sharp recovery in the second half demand? And what sort of revenue growth is possible in FY25 given your current assessment?
So, I think for us, the demand remains good as it is right now, as you've seen in quarter 1. We see a good visibility because that United States gets ready for the holiday season, and that's been the trend. So we definitely see that demand being at a steady state here, Rajvi. And when we talk about our growth, we have given a commitment of around 12% growth, and we remain cautiously optimistic about it, and we will top it up as we go forward, as we have done the quarter 1 as well.
Okay. Yeah, thank you.
Thank you. Thank you, Raju.
Yeah.
Thank you. The next question is from the line of Biplab Debbarma from Antique Stock Broking. Please go ahead.
Good morning, everyone. So my first question is on the growth, 16% year-on-year growth. So, ma'am, which segments contributed to this 15% growth? And is it because of volume or price growth, or what is the contribution of volume growth in this? Yes, thank you.
Sales. Hi, Biplab. It has primarily been the sales, and it has also been an impact of the exports primarily. As you have seen that the emerging markets have been a little subdued comparatively as well. So while we see the exports growing at a rate of 17%, and that's what has actually contributed to it, our emerging businesses actually were a little subdued. Also because if you look at flooring, with the kind of 64%, at the factory, it is running at, capacity. We could have done better if the Red Sea issues would have been a little more, not that challenging. So, it has been a mix here. When you talk about the margins, I think I would say that the exports have contributed to the margins as well, primarily.
So, The growth
Yes,
has
sir.
mainly come from volumes, as you had asked. So price, there has not been any change, major change. So the growth is basically volume growth.
Okay, great. Second question is, I missed that funding part. Sir, how you are funding the distribution of the cash outflow for distribution of dividend and buyback?
So this is
From
internal resources. So we have earned free cash flows earlier, and which is available with the company, and it will be paid out of that.
Okay. Sir, since you have that, and it is also this quarter, I think that has grown a bit. I'm just wondering, could we not have used the money on that repayment, or this is how the capital structure you want to be?
So, our capital allocation demands that we pay off to our shareholder as well, some percentage of our profit, and hence we have been doing year on year, so that we have done. Despite that, as I was telling you in my speech, that we have been reducing our net debt from 2,300 odd crore to 1,300 odd crore, and this year, despite all these payments, we would be in the same ballpark range of financial year 24 net debt. So net debt is not an issue.
Okay. And my final question, with quarter one seeing strong growth and outlook on exports looking positive, shall we maintain the same guidance on top line and that, or we would like to change our guidance?
So, as Dipali mentioned, we are cautiously optimistic because we are seeing the Red Sea issues and other economic issues which is gripping the world. However, as we had maintained, we will top the 12% growth that we have already guided towards, and we will meet our bottom line guidance of EBITDA at 15% to 15.5%, as we have guided towards.
Okay, sir. Thank you, sir. I will come back in the queue.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Anushka Chitnis from Arihant Capital. Please go ahead.
Hi, thank you for the opportunity. My question is related to the buyback. I wanted to know if the promoter entity will be participating in this.
Yes, as we mentioned in our speech, yes, promoter entity will be participating 100% in this.
Okay, thank you.
Thank you. The next question is from the line of Prerna Jhunjhunwala from Elara Capital. Please go ahead.
Hi, congratulations on strong set of numbers. Ma'am, I wanted to understand more on flooring, why Red Sea is impacting that segment more than other categories, which are also export driven.
So it's a little different here, Prerna, and you must, when we talk about home textiles, it's mainly primarily FOB. Here you have CIF and you also have the DDP shipments, and hence the challenges were there, and where we actually got challenged to get the containers for the flooring.
Oh, okay.
Yeah.
And ma'am, how would be the volume versus price growth in this segment, in this 1% growth? Because utilization levels have improved. So just wanted to understand whether there is some price correction or is it inventory lying in the system?
Yeah, hi, Prerna. So as I mentioned, more or less this is volume growth. However, there have been some mix change as compared to hard and soft breakup. So hence that small impact might have come, but mainly it is volume growth, and volume, though we have manufactured during the quarter at 64% utilization, we have not been able to ship it because of the issues that we are facing for blank sailing and containers not being available. You will see those impact in the current quarter when we will ship it. Hence, there is no price erosion.
So, what kind of growth can we expect in flooring business in this year, given the visibility on demand that we have today?
We had given a guidance of about 20 to 25% growth in flooring for this year, and which we will achieve.
Prerna, we will, we'll achieve that. And in fact, if you've seen the domestic flooring also, it has grown 15% year on year, and we definitely are on that trajectory.
Okay. So the demand scenario remains decent. I mean, there is no challenge over there.
No.
Is? Okay.
Not at all.
Oh, okay, great, ma'am. Ma'am, what is this HD? In HD, the e-commerce segment has seen a significant degrowth. What would be the reason behind it, and what is not included? I mean, I'm just trying to understand HD e-commerce and HD brands. How do you bifurcate also between the two?
So I think they're very different. One thing is that when you talk about a global one, it is primarily we talk about omni-channel. And omni-channel, it is quite sometimes gets seasonal. But I think we are on we basically are on track because the retailers buy it and then they sell it, And while we do that, I think I must tell Prerna, you must go on spaces.in and see, because that's our brand.com. Christie.co and Christie.co.uk to see our brand.com sites. And you should see, because if you look at Christie, they are growing at a rate of around 20%. Spaces is also on that path, and do give us the feedback. Omni-channel is a behavior of the customers. And, it is a little seasonal. As you know, it is summertime. People are far more, outside rather than, buying online more, right? And it's more so discretionary needs and experience. So people are basically buying offline, and that has been the kind of thing.
So Prerna, the difference that you see in quarter one of last year and quarter one of this year is mainly, as Deepali said, is our sales to the omni channels. And omni channels, they buy more in some quarter, they buy less in some quarter. But overall, our growth will be there in this sector. But this quarter we have seen a dip because in the last year, same quarter, some high purchase was done by the omni channels together, which will now spread to maybe quarter 2 or quarter 3.
Okay, so it is because of the base effect and nothing to worry about it. Okay.
No, nothing at all.
Okay, because you saw Amazon sales. I mean, they are increasing. So I thought, what is leading to this e-commerce?
Sales from those omni channels are happening as it is happening. So there is it's the stock built up which happens. So there was a smaller stock built up. Some stock we could not send because of the Red Sea issue. So all these issues in stocking are right now taking place. So you shouldn't read so much into it. You should give some time for more quarters to see the real growth coming.
Perfect, sir. No problem. And my last question is on margins. Given the correction in raw material prices and challenges on maybe freight front, what is the guidance that you are giving for home textiles and flooring separately?
So, Prerna, as we said, we are keeping a close watch in this situation. We have contracts with the liner, so we will not allow our cost to go overboard in this. The only challenge could be timely sending the goods, delivery of the goods. So we don't see any impact on the cost side coming in a major way because of this. Might be 0.2, 0.3 here or there, but not much.
Oh, that's not major at all. Okay, great.
Yeah.
Great, ma'am. And last, on expansion status, is it on schedule or?
Yeah,
we had said that we will start both the plants in quarter 3 sometime. End of quarter 2.
End of quarter 2.
Quarter 3, we will do that.
Yeah.
Okay, great. All the best. Thank you.
Thank you, Prerna.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and one. To ask a question, you may press star and one. The next question is from the line of Biplab Debbarma from Antique Stock Broking. Please go ahead.
Thank you. So I have just one question on the margin side, sir. We're seeing volume growth contributing our growth, and assuming that there is no further disruption in supply chain, what kind of EBITDA margin do we expect in FY25?
So, Biplab, we had guided towards 15 to 15.5% EBITDA during this year.
Yes.
For the consolidated business, so we will stick to that.
Okay, so that means since quarter one is around 13.5, so we'll see a margin expansion if everything remains the same, right? So in the beginning of the contract,
without the other income. So I'm talking about with the other income, the total EBITDA for the company should be in the range of 15.
Okay. Thank you, sir. All the best, sir.
Yeah.
Thank you. A reminder to all participants that you may press star and one to ask a question. The next question is from the line of Pawan Chetta from Enam Holdings. Please go ahead.
Good morning, and congrats on excellent growth across both the businesses. If I see your presentation, your bath linen utilization almost has reached 94%. So what would be the optimum utilization or debottlenecking from the existing 90,000 tons? And secondly, I think you also announced 6,400 tons of Jaguar towel expansion. So how much time that would take to ramp it up to 100%, since the demand looks very strong in US market in this category?
No, I think, I just will add up here, is that, our optimum levels are where we are today. But going forward, having said that, with the Jacquard facility coming in, which is right underway, by August end and September, we'll be up and running on that. That actually will help us to, leverage the mix that we have. And it is also very seasonal as well. So, the mixes keep on changing here. So definitely we will see a mix, and we are absolutely on track on that. With Jacquard, it will help us to leverage our capacity. And also, as we go forward, debottlenecking is something that we definitely look at, and our ancillaries are also there, which help us to which contribute to substitute when the demand comes in.
Sure. Second, on flooring business is ramping up well, both on top line across markets, and margins are improving. So what kind of optimum margins at what capacity utilization you're looking? We already reached 9%. I believe at optimum level it would be 15-16% odd. So when can we see that kind of operating margin in flooring business?
Hi, Bhavi. So
hi, Sanjay.
Hi. So we have a plan of growth of flooring at about 20% plus CAGR over next 3-4 years, which would take us to a capacity utilization in excess of 80% by financial year 27. Once we reach 80% plus capacity utilization, we should hope to reach a EBITDA of about 15 to 16%. Which is
at 80% utilization?
Yeah, at 80%.
Sure. And on slide 12, when we are saying annual capacity installed and annual capacity effective, you're calculating utilization on effective capacity. What that means?
So we have built the plant for total capacity of 27, while we have fitted the plant with machinery for 18 million square meter. We will need to spend some balancing capex to make it from 18 to 27 when required.
Yeah.
Unless we reach a capacity utilization of 18, we will not spend in, putting additional capacity.
Sure. Thanks. And last one, if I missed out on what's the capex outgo in FY25 and possibly FY26 if some projects are going into 26?
So we have given a guidance for 2025 for 860 crore of capex, which includes Anjar towel, then pillow in US, and then 75 crore for our transmission line for the renewable energy, plus balance maintenance capex. For 26, we have not yet given the guidance, but we can expect to see 300 to 400 crore of capex in next year as well.
Yeah. Thank you and best of luck. Yeah.
Thank you.
Thank you. The next question is from the line of Resham Jain from DSP Asset Managers. Please go ahead.
Good morning. So just on the demand front, when we look at some of the commentary of the retailers in US, the outlook is quite mixed. And in general, we have not seen any material kind of improvement in terms of the retail demand in US. So from your perspective, how are you looking at US? What will be your strategy, let's say, in the current situation? If you can just give your thoughts around it, that would be very helpful.
In fact, hi Resham, I'll just give you a perspective here. Walmart, if you look at their commentary, they are giving a positive outlook there. And even Target, they have actually changed their perspective on it. The clubs continue to do well, if you look at their results as well. And departmental stores were the challenges that we saw. But if you look at a few, they are turning around as well. The discounters continue to be strong. So I can just say that, while we've been hearing about mixed, perspective, but I think with America, we are very, very positive about the growth that we see coming in, because I think America prepares for the holiday season by Q3. So we are good right now as we see the demand.
Okay. And the second question is with respect to the all the three verticals within the home textile. Can you share your outlook, not numbers, but which segment between bedsheet, towels, and carpets and rugs will grow faster than the other one? If you can just give your thoughts.
So I think it's a mixed bag, right? Right now, like if you saw, the terry towels, the growth was 10%, sheets was around 40% this quarter. And rugs also continue to grow at a steady state. And it's a mix actually, Resham. So, we will not be able to tell you where it is, but I think we'll have a steady mix of whatever we have committed as a top line and, and the growth.
Understood. And from the last question is from the Indian manufacturer's perspective, how do you see the competitive landscape emerging? Again, over the last 3-4 years, there has been a lot of shifts, which has not shifts, but the dynamics have a little bit changed. And hence, if I look at your, let's say 3 years back guidance, it used to be 20 to 22% kind of range used to be the normalized margin, which has come down obviously now in the current dynamics. But generally from the manufacturing landscape perspective within India, how do you see the situation?
Yeah, hi Resham. So we have discussed about it in earlier forums. When we are talking about 20 to 22% margin, we are also talking about cotton rates which were at 40 to 45,000 rupees. Now, since cotton rate has now come to a new normal of 60 to 65,000, you cannot have the same level of margin, because end consumer doesn't want to pay price above certain limit, and hence the normal average margins have come down to 15-16% level. But still in export business, as we had mentioned, we are getting a 17 to 18% margin, which is healthy margin for us. As our emerging businesses of flooring, advanced textile, domestic business starts to gain momentum in not only in sales but also in profits, we should see a range of 16 to 18% EBITDA for the company as a whole in the next couple of years.
Okay, understood. That's helpful. Wish you all the best. Thank you.
Thank you. The next question is from the line of Shraddha from Asian Market Securities. Please go ahead.
Yeah, hi. Congrats on a good quarter. Couple of questions. First is, why did the utilization of the bed linen come down from 79% to 69%? Sorry, I logged in late to the call, so I'm not sure if you've answered this.
Yeah, it is actually a matter of just operations, but as we saw that the sheets are around 40%, and when we talk about it's a mix of, fashion bedding and the others, so you would have seen this. But as we go forward, I think we'll be at around 84%.
Right. And on the jacquard and terry towels, so how should the realization differ for both these product mixes? So what should the realization be for jacquard towel, just a broad ballpark range?
Generally, it would be slightly higher because, jacquard towels, the cost is higher in making it. So 10 to 15% difference is there in the jacquard towel would be better than the normal towel.
And asset turn would be how much in this capacity?
1:1.
1:1, right. And so secondly, how should we look at the power cost given the kind of initiatives we are taking on the new incremental green energy side? So how should the power cost come down as a percentage of revenue?
Yes. So slowly as we build up our renewable energy capacity, we should get towards a power cost coming to half of what we have.
Yeah. It will be the most competitive power cost that we'll have because of this.
So we should see it coming from the year 26-27 fully.
So that itself should give us, good leeway on the margins front. So we can look at margin improvement of 200 bits plus over the next 2 years.
As I said, yes, we can.
Yeah.
Right. Sure. This is helpful. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today's conference call. I now hand the conference over to the management for the closing comments.
In all our businesses, core as well as emerging, we have been able to grow at 17% Y-on-Y in Q1 and confident to achieve our guidance for FY25 as shared earlier. The exceptional growth we have achieved across our businesses in FY24 is a testament to unwavering commitment to provide to our customers unparalleled, innovative and patented products, actionable insights and solutions driven by our investments in technology and digitization, which truly position us as the FMCG of textiles. We continue to have greater focus on the India market, which is shining star in the current global economic scenario, with deeper penetration in retail segment through increased EBOs, MBOs, and higher brand visibility, and hence reinstating Har Ghar Se Har Dil Tak Welspun. Domestic flooring is reaching newer heights, and overall flooring businesses have continued its profitable growth during the quarter. Simultaneously, ESG remains a cornerstone at Welspun, and a commitment to sustainable and responsible business practices continues unabated through increasing investments in green energy initiatives. We are committed towards our future growth targets for all our businesses, and with sustained growth profitably, we would continue to achieve higher ROCE and ROE, thereby creating substantial value for investors and stakeholders. Thank you for your continued interest in Welspun Living. For any further queries, please feel free to connect with Salil and Sanjay.
Thank you. On behalf of JM Financial, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.